Your market is cooked. Completely cooked. Nasdaq up 1% before the Asian session. Then goes on to claim another percent on top, 2% up. Like, what on earth is going on? No volume, by the way. It's just going up. But is the market cooked? Let's be honest now. I know we have a little bit of a rant and what have you. By the way, welcome, ladies and gentlemen. Traders Reality, Tino here. We've got a big day tomorrow, man. A very big day, a very important day. And I'm going to help you understand why, if the market is really cooked, or we're just being set up. Now, word on the street is that it's been the first time in a long time that the dot plot, you know what the dot plot is? It's where various members of the federal board, FOMC, members are deciding on where they think interest rates should end up. All right. And they put their little pin. They like, I believe it should be 3.5. I think it should be 3.2 or it should be 4, whatever it is. But the first time in a long time, we're starting to see that there are a lot of participants in the Federal Reserve that are mixed with what should be happening. Some people are saying that we should go for massive cuts. Others are saying we should hike. Hike, ladies and gentlemen. That wouldn't be the first time they've done that. 1974 bond massacre. Market was, they were going to keep the rate same, keep it the same, keep it the same. Then all of a sudden they turned around and they said, you know what? Let's increase the interest rates. We're not kind of keen on where we are right now. But great news, retail sales is up. So your economy is doing good. But wait a second. Tariffs, ladies and gentlemen. We don't know where we are with China yet. Now, US has just come out saying it will consider imposing, wait for it, new national security tariffs on additional imported auto parts. So that makes you question, why on earth has Elon Musk bought back $1 billion worth of Tesla shares? Who knows? I mean, that's what you do. You buy at the all-time highs, don't you? That's what you do, yeah? Well, ladies and gentlemen, I'm going to take you back in history because December the 18th, 2024, those of you that will know what that day is, you'll understand that we're sort of seeing the same thing happening. And if the markets are the way they are and the mechanics do actually still work, because what do you do when you're trading all-time highs? Do you draw a Fibonacci into space? Do you draw a triangle in midair? What do you do when you're dealing with all-time highs? We're going to break it all down for you, ladies and gentlemen, and hopefully by the end of this live stream, you have a good understanding of what to expect. Me personally, we are going to dine in hell, ladies and gentlemen. That's exactly what we're going into. No one knows what the Fed's plan is, but the market will always price in what it wants to believe. What actually happens is a completely different story. So, let's break it all down, ladies and gentlemen. It's been a pleasure having you. When you say that at the end, but anyways. So, retail sales come in 0.7% increase. What on earth is that? Year on year? Month on month. 0.7%. Prospectus was 0.4, doubled that nearly. Then, of course, 0.2 was the month on month expectation. It came in at 0.6. Why? Tariffs. Think about it. Normal goods, consumer staples and all of that stuff, you got to say to yourself, well, if I'm going to be told that in the future it's going to cost more money because they're going to replace it with made in USA as opposed to made in China, that means I'm going to be paying more. So, ladies and gentlemen, comment below and tell me, if you were going to buy an item for $25 that said made in China, and you're going to buy exactly the same item, but for $50 that was said it was made in the USA, which one are you happy to purchase? Talking about the same thing. It's just been made in the USA and says made in the USA. A true patriot, which is exactly what Trump is, wants everything to be made in the USA. That's why all these tariffs, all these tech companies are investing in the US, because Trump wants it in-house. They want to try and pull away from Taiwan, ladies and gentlemen. Taiwan is the home of the semiconductor business. They need to come away from that. They're relying on that And they've got China knocking on their back door like, we want to invade you, man, because it's the only way we can really stick it to the US. We really want to get involved and take over Taiwan and all of that stuff. Remember what China did with the rare earth metals? They put a 60% cap on the exports. That rocked the US. Rare earth metals, what do you need them for? Your mobile phone, ladies and gentlemen, the camera that I'm speaking to you on, the phones you're watching this on, and the desktops, whatever it is, it's all packed with rare earth metals. So retail sales comes in high. It's telling us that people are starting to get concerned, maybe, with the idea that tariffs are going to affect the usual stuff that they're buying. So they're probably going out now and buying more of it. That probably explains why the manufacturing sector's going up, why everything's turning over nicely, or looking like it's turning over nicely. We're going into tomorrow's non-farm pay, FOMC. And it's the biggest moment in the financial world because the US is stepping up and cutting its interest rates. We've got it there. It says 4.25%. Now, earlier on, I said to you, we're going to have a little bit of history, yeah? Cool. Let's just have a look at how cooked this market is for a second. Nasdaq yesterday went up on literally minimal volume, okay? Bottom right here, this is the daily chart. Volume was below average, below. It's been updated, and it's actually below average, okay? That's no good. After all that movement to the upside, volume is below average. I mean, come on, man. Yep, silver is pumping, ladies and gentlemen. Gold is pumping, ladies and gentlemen. Why do you think that is? Well, the copper-gold ratio is going down, so that means, obviously, economically speaking, things are looking bad. Let me take you back to a time in history. I mean, look at this. Is that not cooked? That is literally a bacon sandwich right there. I don't even know why I said bacon sandwich. Let me take you back in history, ladies and gentlemen. The 18th of October. Sorry, December. All right, let me just do this to you right now. You know, for my bar replay players. Okay, let's do this. Okay. Let's do this for a second, just to make a point. Hurry up, you flipping thing. Okay. What's this, ladies and gentlemen? Come on, work with me. What's this? Is this not what we're looking at right now? This was in December 2024, 18th of December. All right? 17th, actually, this was. All right? Monday. All right? What are you looking at right now? Are you looking at history? Yes, you are. But what are you looking at? You're looking at all-time highs. Where's the Nasdaq? There. Well, there's nothing else over here. Okay? Nothing. Right? So what are you looking at? You're looking at a gap. Right? Cool. This was Monday. Tuesday, of course. And then, of course, roughly 6 o'clock. Well, actually, let's just wait. Let's add another hour. Oh, what's that? What does that mean? That was the FOMC, ladies and gentlemen, on the 18th of December, 2024. What did they do on the 18th of December, 2024? Interest rates were 4.75%. They cut them down to 4.5%. A nice little 25 basis point cut. That happened. So you can see what's going on here, yeah? Criteria, gap up, wild behavior. Where's it going to go? All-time highs. What's moving? I can't believe it. Rise, retrace. What flop? FOMC. Powell coughs and the market collapses. Now, let's just forget that now and have a look at where we are over here. So let's just cancel that. Clear that. Yep. Okay. Now, where are we? Sorry. I'm still on December the 18th. Now, what? Is the market mechanics doesn't work anymore? Does it not exist? I'll back it up for you, ladies and gentlemen. Go to the actual forex calendar. Go into the federal funds rate. Go all the way down here. Click more. Go to 18th of December. What did you have? 4.75 rate was the rate. The expectation was 4.5%. The next cut was 4.5%. They gave us the rate cut. That was your pivot. That led to a nice corrective move to the downside on December the 18th, 2024. Tell me why that is not what's going to happen here. Tell me why. Because economically speaking, we were not in that much of a bad situation compared to where we are right now. Labor market was at significant 50-year lows. It was touching that 4% unemployment rate. Average hourly earnings were just touching that 0.3%, okay? Non-farm payrolls were just low, 200,000, 215, 210. They were low. Now we've got unemployment rate going up 4.3%. Unemployment claims last time came at 265,000. Non-farm payrolls, 77,000 jobs were available. The JOLTS job openings report, cooked, came in lower. ADP was zilch. What do you do there? So by the mechanics of the marketplace, logic says that the gap on Nasdaq should get filled. Funnily enough, Monday, Tuesday, Wednesday is history repeating itself. Because mark my words, ladies and gentlemen, stocks are so overvalued it hurts. Anyone that's buying stock with commitment right now, ladies and gentlemen, you've got to be very, very careful, because what's going on right now in the stock market is what could be rotation. Okay? Who's this? NQTino. If they liquidate bulls who do not exist, no volume, then what's the point of coming down in the first place? It's inducing. It's engineering. It's making... Listen, this is belief, my friend. This is belief. This is not pricing in a rate cut. This is pricing in 1, 2, 3, maybe 4 rate cuts. Maybe is the operative word. Maybe we'll get the rate cuts. Only this chart right here puts things into perspective. The dot plot. Look at it. It's dispersed. Who's this? Nearly 2.5%. What's this? There's too many spaces. There's not an agreement in place. It was up here. There's an agreement up here, sort of. But as we're going into 2026, it's all over the spot. If they believe that the interest rate should stay higher for longer, it should look like this. But you can see it's all over the spot. You've got different commitment. It's like there is sort of mutiny on the bounty at the Federal Reserve. You got Donald Trump breathing down their throat. He's trying to get rid of Lisa Cook, but she's all good now. The judge says, just carry on doing what you're doing. We'll sort it out later on. Okay? We're trying to work out if the Federal Reserve or Jerome Powell is going to decide to give us 25 basis points this time, which is what we're getting. Okay? Are we going to get another 25 this year? Or another 25 going towards the end of the year, sorry. So October and December. Are we going to get any this year at all other than the 25 basis point cut that we're getting? What about 2026? What's going to happen there? Whilst all that's happening, you're getting the illusion that the economy is doing well and the unemployment market's going up. That's not a good economy. You need people for the economy to sustain itself, because the more people that are working, the more demand from the consumer there is. Whatever news announcements comes out from now moving forward, nothing's going to touch this market. It's not. I believe it's being engineered because people are missing out. When you see price expanding so much to the upside, you only think that you're missing out. This is sentiment. This is belief. That's why the volume's not present. There will always be a supply. Someone will always someone will always make a transaction. And that's what you've got to understand. Then we go over to our dearly beloved Bitcoin. What's it doing? It's stuck in this XRP formation. You can bet the house that Bitcoin does nothing when we've got FOMC. FOMC comes into play, Bitcoin explodes. Because there will be a short-term rally. Now, look at what's going on. Bitcoin is consolidating sideways. Nasdaq has made a move to the upside, okay? Logic says Bitcoin should be moving up. But if Bitcoin's not moving up because it's such a high-risk asset class, Is Bitcoin giving us clues? Now, naturally, FOMC comes into play. Bitcoin can easily pump just off the speculation and anticipation of the rate cut itself. The moment the cut is solidified, the market will rally, but it will equally shoot up to come back down, because then that's going to be the proof of really what's going on. Look, let me explain it to you. This stock market rally that's going to the upside, what's it being backed by? In front of you are the list of the stocks that are breaking out, right? Big stocks breaking out. Let's break it down. First stock, right? Oracle. We know that's doing great because it just jumped into bed with a relationship with OpenAI, $300 billion. Happy days. We know that revenue is going to be great for that company in the future. Look at it. 16 million shares per day averagely traded. Market cap itself is coming in at $848 billion. Just about to clear that $1 trillion mark. Google clears 3 trillion. Happy days. So now being in the trillion is the next thing. It's like, what's a billion? Your company's what? 50 billion market cap? Come on, man, that's chump change. You need to be in the trillions to really actually have a point and be important. Next company, Micron Technology. What's that? $176 billion. Breaking out, $157 a share. Average daily volume coming in at $20 million, okay? Okay, so we're in line with the idea that tech right now is holding it down, okay? What about this? Taiwan Semiconductor, Standard, that bad boy, another tech company, okay, cool. Alibaba, what's going on there? What's that doing? $17 million, sorry, 17 million in terms of market average daily volume, and then you got a $364 billion market cap. Okay, next one, Blackstone, asset management, cool. What's that? $134 billion. Asset management. What's going on there? Okay, then. Chart industries. What's this? Oil and gas machinery equipment. Okay, then gas energy. All right, that's moving up. Why is that moving up? It's because it's reaffirmed 2020-25 adjusted earnings guidance for $12 to $13 per share. Okay, so they've had a revision on their expectations of earnings. Why are they giving an expectation that there's going to be more in the future? Maybe because the shit's going to hit the fan. And where does everybody go? They go to oil. They go to gold. They go to silver. They go to copper. They get concerned, they go to commodities. Maybe that's probably why. Or they found more oil and they're going to start drilling. We don't know. But you can see that the heavyweights that are leading this move to the upside, okay? Where's Nvidia? Where's Google? These are stocks breaking out. If they're breaking out, it means they're claiming all-time highs or coming from consolidation. If I don't see Google, I don't see Meta, I don't see Amazon, I don't see Apple, what's going on? Well, Apple have just revised their actual release date for the iPhones, giving the idea that things are going to slow down. Let's go and have a look at Apple for a split second. Where are we at with Apple? Where are you? Here we go. Apple. So close to its all-time high. Nasdaq making all-time high. Apple's not there. Meta. Nowhere near its all-time high. Okay, right, nearly $800, but it's at $764, okay? Not there just yet, okay? What about Intel? Well, not really doing too much, still at this all-time highs, but it's not leading the breakout. Why? Because the interest rates are going to impact these companies massively, because changes in yield will impact technological stocks. What I'm trying to say to you, ladies and gentlemen, is this. Look at this data here. In front of you, this is your bull market. 283 stocks were up on volume yesterday, but then there was 209 stocks up down on volume. So the equal amount of buyers came in with the equal amount of sellers. That's not, in my opinion, a bull market. It needs to be 283 stocks up on volume. Down on volume must be 50 or 100. Do you remember the day when Trump said buy as many stocks as you can and the stock market pumped nearly 12%? Yeah, you know what was up on here? It was up on volume was nearly 1,000 stocks up on volume, and down on volume was about 100. That is consistent. We've got 6 distribution days on the S&P, 5 on the Nasdaq, and it's all coming into play when the FOMC is released tomorrow. How many of you believe we're going to get the rate cut and the market's going to sink? How many of you believe that? Anyways. Bitcoin. Again, not doing too much. You're going to get some activity. If we go and have a look at it on chain, miners have started to sell. Yesterday, they weren't too keen on that, but we're seeing some selling on the miners. Quickly go over to the stablecoins exchange stablecoins ratio. That is wonderful. That is perfect. The lower this goes, the more accumulation is coming into play. All right? Let's go and have a look at really what's going on. Wow. Euro's going up because the expectation of the dollar's yields going down. Quickly going over into the yields. What do you think they're doing? They're getting out of the yields, getting out of, should I say, dollar positions, because they're losing money on value. Remember, forex is about perceived value. It's not about Fibonacci. It's not about technical analysis. Forex is about perceived value. What are you exchanging? One currency to the next. You think big banks give two damns that they have to exchange hundreds of billions of dollars because a Fibonacci ratio has been hit? Please don't undermine this marketplace. Don't get twisted. When it comes to trading, different story. But forex is about value. So right now, the yields on the dollar are going down. What am I going to be sat in dollars for? I mean, let's just be honest now. If I go to the dollar right now, I can see it's obviously taking a shoe bag to the downside. I'm losing on my dollar and the Nasdaq's at all-time highs. Anyway, if I'm losing on my dollar, my euro is up here. Okay? Equally, my yen is up there. Yen's going to increase their interest rate. Well, that's the word on the street. Maybe this is the start of the rally to the upside for the yen. The yen goes up, the dollar goes down. And the dollar goes really down. Because then that will be the carry trade unwind. What a wonderful setup. Interest rate decreased by the Federal Reserve. Historically, Fed pivot comes into play. Market's correct. Last time it happened, 18th of December 2024, from 4.75 down to 4.5%. The Nasdaq did a gap up the day before and then sank the next day, 7 p.m., clockwork, Fed cut. 2025, going into September, what? The 17th, a day before the last time in December. Nasdaq has gapped up, zero volume. Stock market data is cooked. Stocks are overvalued. We're going in for a rate cut, ladies and gentlemen, and that rate cut itself is a little bit wishy-washy. We've got mutiny on the bounty in terms of the federal board members because not all of them are on the same page, courtesy of our dot plot. So the question grants, is this market cooked or not? Because quite frankly, ladies and gentlemen, with the market behaving like this, again, back to forex, euro up, gold up, dollar down, yen up, okay? We're starting to see a transition from investors because the yields are changing. The value of dollar is going to change, but it won't change until it changes. And when Powell tomorrow tells us you're getting your rate cut, but that's it, that is when everything slumps and your dollar reigns supreme. Why? Because everything's going up because we believe now we're getting rate cuts and rate cuts and rate cuts. But if Powell turns around tomorrow with a hawkish statement and says, you get your one rate cut, cool. But after that, we need to sit tight. Why? Because inflation. Do you understand? If we... tariffs, automobiles, tariffs. What's he saying here? Europe has to stop buying oil from Russia. Okay. And Hamas will be in big trouble if they use hostages as human shields. So let's just chuck another war going off into there, or intervention, sanctions on oil, oil's price going up. Things are going to get a little bit concerning. Everything's at all-time highs. Does that make sense, ladies and gentlemen? Does it make sense for prices to keep going up today for them to just take a shoe bag down tomorrow? Of course it does. Because how many people actually look at this and let's be honest, ladies and gentlemen, how many of you, all right, when you came into cryptocurrency, did you even bother looking at the yields? Did you ever bother about dollar dominance? How many of you were paying attention to data, like information like this? What about non-farm payrolls? Did any of you in cryptocurrency give two shits about non-farm payrolls or the CPI? Nah, none of you, okay? And some of you may have, but let's be honest, the bigger picture cryptocurrency was in the cryptocurrency game. You're only focusing on Bitcoin up and that was it. There was no reference to why the carry trade was important. When the carry trade unwind came into play, it made me laugh that there were quite a few influencers on X were like, what the hell happened to Bitcoin? No one knows. Huh? How do you not think that? No one knows. And then I go in the comments and look, and it's like whales sold, whales sold. So that's why. Well, ask yourself why the whale sold. Not what happened, ask the why. And then afterwards, the carry trade came out. Everyone started to dive into it after it was revealed what it was. And people are like, okay, maybe we need to start focusing on what that story is, because on Thursday night, we're going to know if it's going to happen again. Capiche? Yes, dollar rises, the cut happens, then we use strong dollar to buy risk assets on the cheap. Correcto mundo. That's exactly what's going on. Because what's happening right now is this. Your dollar purchasing power is zilch, okay? Why would you now go and commit to buying NVIDIA at $170 a share, which means you now need more dollars to go and buy more of that stock, okay? You need to exchange more. Why? Because your value of your dollar is zilch. When I say zilch, look at it. What's your pattern on your dollar right now? You are losing $96 for, look, 96.49. You are at a depreciation of your dollar. Anything above 100 is an appreciation. So if you were buying NVIDIA when the dollar dominance, okay, was all the way up here at 109, okay, you were getting an appreciation on your dollar of nearly 9%. So that requires less dollars to buy something of value. Now you are being forced to consume and use more dollars to meet up to the expectation and value of purchasing the equivalent amount of stock back then at 9%. You're having to use more money. But then when the rate cut comes into play and they've priced everything, look at how many dollars I can get with my euros. It changes. I now need less euros to buy more dollars. Because my euro is what? Strong. This is engineered for dollars return, ladies and gentlemen. They price it in. They mark everything up. Euro's going to sink because investors are going to change their euros into dollars. And then when that time, euro down, Japanese yen down, dollar goes up, cash safety. And then all of a sudden, you've got this whole marketplace that's taken a nosedive to the downside. Everyone's looking left. And Warren Buffett's $365 billion is now worth something. So now he can go and buy more stock with less dollars because the big boys ended up sending euro to the downside because they exchanged euros over to dollars, made the dollar go back. You're back to appreciation on your US dollar. Everyone is happy. The market cycle continues or repeats itself. Expansion, contraction. And that's pretty much it, ladies and gentlemen. That is macro 101. Now you're going to ask yourself, are you going to buy Bitcoin because whales bought Bitcoin? Or are you going to buy Bitcoin because macroeconomically speaking, because we are in a macro-driven environment. Don't get it twisted. You got an interest rate cut coming tomorrow. That's a macro event. You got to pay attention to it. Screw the minus position index. Not interested. Forget leverage. Forget open interest. Forget it all. Because the reason why Nasdaq's gone up is because they're pricing in rate cuts. The reason gold goes up is because you're getting a cut in the interest rates. It's sentiment driven. Once the sentiment has faded, it's going to go back to business. All your stocks are overvalued. They're going to take a shit to the downside. And then Warren's going to come in and pick it all up. He's been buying Japanese stocks, ladies and gentlemen. He's been preparing for that. And he's been dumping dollars, and he's been putting it into yen. Why? Because the yields are looking way more attractive. Plus, it's cheap. Plus, he can hold a whole ton of yen on discount. Be interesting if they don't increase their interest rates at the next meeting or even give it a subtle hint that they're not. Be very interesting. With that being said, ladies and gentlemen, I hope that serves you. The market is now open. Just be very careful with price action. And I bid you well. Take care of yourselves, gang. Subscribe if you like the flavor. And remember, tomorrow we'll be going live before the FOMC. So just make sure you get yourself available about 6:30 UK time, which will be 1:30 Eastern Standard. All right?